Hi, everybody. My name is Dr. Richard Encarnacion, and I'm a financier. I work on Wall Street, and I also work in the financial markets, helping ultra high net worth clients, investors, and non accredited investors reach their goals. Mostly help with liquidity and businesses. On the stock loan side, working with ultra high net worth individuals, organizations, and companies understand how to get liquidity from the markets, how to work with a trustworthy organization or institution. So I want to cover today 5 points on what are some of the benefits of using a stock loan, and what are some of the cons of using a stock loan. So let's get started. What are the five benefits, or we're going to get started with the cons actually. What are some of the five cons of using a stock loan? Number one, there usually is a low requirement, meaning there's always a minimum requirement for a stock loan. Usually, most stock loans, on average, start off at around $500,000 to $1 million on the U.S. side, and international is usually higher than that. On average, between $2, $5, or $10 million. So on average, most stock loans, like traditional loans, where you could start it off at 25,000, 10,000, 5,000. A stock loan usually starts off a lot higher. And that's one of the negative things for small organizations. But that's the reason why large organizations and usually ultra high individuals use stock loans. So that's one of the cons. Another one of the cons for stock loans is that there is no documentation requirement. There's no documentation requirement. There's no credit checks. There's no need to verify somebody's history. There's no need for somebody to have another asset. It is usually just the shares or the stocks that the bank or the financial institution is going to be looking at, and that's going to be ultimately the decision, and the liquidity, the trading volume, the share, what country is in, and things of that nature. Number three is that the stock loans, could essentially be used for any purpose, but there is really no restrictions on what you can use the loan for. So that sounds like a negative thing, but some people say, well, that's also really a positive thing, right? So that's really one of the things with a stock loan, is the fact that there's really no specific use case for it. It's just whatever you need it to do. Number four, one of the cons for a stock loan is that not all stock loans or shares will be approved. There's some countries that are restricted. For example, North Korea, Syria, Afghanistan, countries like that. And sometimes even Indonesia, because of some of the scams and some of the things that have been working. But Indonesia can get approved. It just not all lenders would approve Indonesia. And then number fifth is that there tends to be a set interest rate for stock loans, and again, IRS, there's a lot of leeway between what you can do with the taxes on the terms of the stock side, and there's different articles on the IRS with like the 1042 on what you could do in tax deferment and things of that nature. So those are the five kind of semi-cons of using a stock loan. Some of the pros of using a stock loan, like I said before, the pros kind of outweigh all the cons. Number one, you can pretty much do any amounts on the stock loan side, starting at around, I would say that on the lowest end that I've seen is roughly around 150,000, but you could even do as low as 50,000. And then there is no limits in terms of how high of a loan you can get. So that's why institutions use it, because it provides them a lot of liquidity, while also keeping their asset, right? So number one is that you could do almost any amount of stock loan. Number two, stock loans tend to be non-recourse depending on the bank or the financial institution that you use. What that means is that non-recourse, if the shares go to zero and they lose all the value, as long as the paperwork says it's non-recourse and the lender and everyone is telling you it's non-recourse loan, then you're not personally held responsible for the actual loan or of the loan after you use your stocks. So the bank can't come after you for other assets if that asset that you used to get the loan goes to zero. Another benefit of using a stock loan, like I said before, is the fact that the taxes, I think this is number three in terms of the pros. The taxes are deferred, and sometimes avoided, or sometimes altogether, don't have to be paid using certain QRSs, certain legal maneuvering. And this is all legal because you're taking basically money out of your own money that you have, so the IRS really can't tell you, based on the IRS code 1042, there's really not too much things that based on the tax code that the IRS can tell you. Number four, again, there's no credit check, there's no background check, there's no specific thing for specific use case that we could tell you to use the money for. Essentially, you could use the money for almost any reason that you could imagine. You could, and it's really up to you and how you want to use it. I think this is number four, or continuing to number five is that, one of the biggest benefits is that you keep your asset, meaning that if you use your stock in order to gain liquidity, meaning cash, you get, you're able to keep your asset, get cash on top of that, and then the interest rate is usually lower than what you could make back. So for example, like an arbitrage example, if you have, let's say, $1 million and you get 600,000, let's say as an example, LTV of 60% as an example here, 600,000, and then you reinvest that money back into the markets and you get 10%, and your interest rate, let's say, is 3 to 6%. Now you're making between 3 and 6% interest on top of you using more money than you had available. So now you're at 160%, right? And so you're using another 60%, and you're also making money with the money that you just got on the loan, and then you can essentially even pay back the loan, the interest rate, with the same money that you just got, with just the interest that you're getting back. And then on top of this, you keep the asset, and then the dividends are also still paid to you because you're the owner. And in most cases, you don't have to transfer ownership unless it's a higher risk stock or a higher risk country. So I think that for stock loans, the benefits outweigh the problems, or any cons it might be. And for any more questions, you can follow me here on Quora. If you have any questions, just send me a message. Or if you personally if you personally need a stock loan, it could be in the U.S. It could be international, like in England, Spain, Italy, France, Germany, Dubai, Japan, South Korea. Almost any country in the world. And for international, it's mostly like $1 million and upwards. So and then in the U.S. as well. So if you have any questions, and in Canada, feel free to let me know, and I'm here for you guys. Thank you.